Luck or hard work? What really builds a successful startup? Hi, this is Raj Sukheja, a deal and business architect, and your host today at SoTrueBusiness. Let me begin with a question that makes founders slightly uncomfortable. When you see a startup raise $50 million, when you see a founder trending everywhere, when you see a company scale from a small office to a global presence, what's the first whisper in your mind? They got lucky. Let's unpack that. In the startup ecosystem, luck is the most convenient explanation for someone else's success and the most convenient excuse for our own inaction. Here's my perspective. Luck exists, absolutely, but luck without preparation is useless. And hard work without direction, that's just sophisticated exhaustion. The real formula is this: prepared hard work meeting visible opportunity. Most people romanticize outcomes. They don't see the invisible years, the nights refining unit economics, the uncomfortable investor meetings, the governance cleanups, the discipline around cash flow, the clarity in decision rights. They only see the headline. Let me simplify it in startup mathematics. Hard work builds capability. Capability builds credibility. Credibility attracts opportunity. Opportunity looks like luck to outsiders. At Red Mammoth Ventures, we see this pattern repeatedly. Two founders walk in. One says, "We are working very hard. We just need funding." The other says, "Here are our numbers. Here's our contribution margin. Here's our payback period. Here's our governance structure. Here's our scale roadmap." 6 months later, one appears lucky. Investors don't fund effort. They fund clarity. And clarity is engineered. Now let's be balanced. Timing matters, markets shift. A chance introduction can change everything. Policy reforms can unlock sectors. Yes, external forces exist. But here's the uncomfortable truth. Luck is attracted to momentum. If you're static, luck can't find you. If you're invisible, opportunity won't notice you. If you're unprepared, even when luck arrives, you won't convert it. I've seen startups sabotage their own lucky break because compliance wasn't clean, because documentation wasn't tight, because financial models were vague. That's not bad luck. That's unprepared ambition. And this is where founders must mature. Stop chasing lucky investors. Start becoming investment-ready businesses. Stop praying for virality. Start building fundamentals. Stop blaming ecosystem bias. Start building undeniable value. At Red Mammoth Ventures, our role as deal architects is simple. We help businesses engineer their own luck. We align structure, numbers, positioning, governance, and capital strategy so that when opportunity appears, and it always appears for those in motion, you are ready to scale, not scramble. But because here's the reality. Hard work gives you strength, strategy gives you direction, luck gives you acceleration. You need all three. But only one is fully within your control every single day. So instead of asking, "Will I get lucky?" ask yourself, am I building something that luck would choose? If this perspective resonates with you and you wish to keep enjoying free, high-value content like this, do like and subscribe to this channel. It helps us reach more founders who need clarity, not just motivation. And if you're serious about structuring, strengthening governance, and architecting capital the right way, connect with us at Red Mammoth Ventures LLP. Let's build businesses that don't wait for luck. They attract it. Thank you. This is Raj Sukheja signing out.